We made a lot of money on this drop. A lot of money on this drop. Pull back up. Clear direction is bearish. Break of structure. After it was bullish. Break of structure over here. First sign, big sign of indication was this. And then we had push back up. So what's up, everybody? What's going on? And you guys can see things were churning out to be pretty good when we started off around November 16th to become bearish. I already talked about this in my previous video, this push up right here and what happened here. So I want to talk about the rest of these trades. Remember, repetition is key, and to being disciplined with your strategy. My strategy is this. So you can see over here, we formed this trend line starting from here to here, attempt to touch. You can still draw it out there. You change trend lines as structure changes. So if you had a high push up to here and then a breakthrough, just like we had over here, I would draw the trend line to touch that point right there. But right now, we are drawing it out right here because of the fact that it touched this on a breakout. So right down here. So for example, this is going to be a key level that we're going to look for. But right now, as far as what we've seen before, so you can see we had a clear indication of volume kicking in. We started to push up. The only issue with this is a measuring gap. You can see a measured gap move to the upside. Why is it a measuring gap? I'm going to explain this. You have a candle right here that is bullish on the 5-minute. What happened before? You had bulls buying start off from here and here. Now, when we come to this level right here, bulls are buying the closes. As soon as closes, they're buying. As soon as it closed, they bought. Bears came in over here, pushed it down slightly. Bulls came back in. They're buying. Now they're no longer buying the closes. Now they're buying the pullbacks. They bought a pullback, close above, pullback, close above. Starting to show that signs of bulls are decreasing. So what happened is you had a no demand right here and confirmation. I didn't enter this trade, didn't call that out or anything like that. I'm just saying it was there right there. But where was it at? It was at a key level of a previous attempt to push back up and fail. So you can see it. Fake out, break up. Next candle is a clear bearish candle, indicating sellers are coming in, and we start to come down. Now, what I would look for is to see, can we come back up and retest this no demand? And the answer is we did. This is a beautiful indication to show you what a measuring gap candle looks like. This is a measuring gap candle. This traps bulls while bears are looking to sell in this area. And bulls that were buying here are trying to get out because of such a drop. So what they start doing is they start to grab as much as they can, price. They start to grab here, they buy here, push it up, trying to push it back up to this level because they bought here thinking that it will continue up. And then you can see is we had the reaction. Key, remember, I always talk about this, reaction. This is what we look for always. And then you can see on the next candles right here is now another no demand. Right here, this candle right here is another no demand. So let's draw this out so we can, this I'm gonna start highlighting this so people can like really visualize it, what's happening. So that way I can extend out and show them that when you get a retracement back to that no demand, it's fine to enter the trade. You know what I mean? It's not about fine to enter the trade. Now it's becoming even more valid when it fails to break back above it. It's becoming more valid of a no demand, short position, bearish, or the opposite goes a no supply, bullish reaction to the top. So let's stick to what we're seeing right now is we have a clear indication that failed attempt to come back up directly at this no demand right here. Remember, no demand is lower than the previous two candles. And you can see it right here. Attempt push back up. Failed. As soon as we get to these levels, which you can, if you want to, you can draw it out right there exactly. Extend out. You can see. Attempt, fail, reaction, bearish. Push down, push back up. Bulls came back in to get out of their position right here because it failed. They got out, and then bears came in, sold off, and we started to have the reaction. So you can see what happened is after once you enter this trade right here, you're gonna have a stop loss above here. Okay, and then you can see this reaction. The reaction is pushed down. The problem is as soon as we came down, we had a sort of a bullish reaction. I wouldn't say 100% because the next candle after that wasn't so great for a bullish reaction. A better bullish reaction would have been a bounce off of this area, which is this key area right here. Why it bounced off is a close above this candle. Then it would be, you would be looking to very wary to probably get out of your trade or put your stop to break even, because if it comes back up here and it closes above these, you're going to be looking for higher prices. But again, we failed. We came up, bulls, weak. These are weak bulls. These is not strong bulls. This is weak bulls buying. Weak bulls, weak bulls, fake strong bulls. That's what I want to call them. Fake strong bulls came in right here. You know, getting retail guys, whoever, to buy in because we closed above. Look like structure is gonna, you know, come back to the upside, but reaction is key. Always remember, reaction is key. Reaction came in bearish. What happens is we start to push down, failing to break, but nothing, you know, out of the ordinary as far as a strong push up. You see a little small trend line forming here. Come up, break that. Reaction is bearish. Still coming back down. Reaction bearish as we come up. Come back up. Reaction bearish. Come up. Reaction bearish. You see how this is where details come into play. Very good, important keynote right here. Bullish. Reaction bearish. Forget about this candle. It's just undecided. Bearish. Bullish. But reaction as we push up. Bearish. Come back up. Attempt to break again to close above. Bearish. Attempt again. Last attempt. Bearish. Second candle closes bearish. We start to push down. Then here comes the sell-off. That's it. You know, bulls knew they can't do anything after that. So what happened was, is you get, as soon as you get a break, anybody who has a stop loss below here and they bought in these areas is gonna get taken out, and it's gonna be a big drop. So this is exactly what happened. You had a drop on the 5-minute candle, 84 to 78. You know, a nice almost $7-8 move. I just want to show one thing is a lot of people, a lot of traders, retail traders will wait for a break of these levels and sell. Nothing wrong with it, but the problem is a lot of times you'll be failed breaks and you just keep coming and you just keep waiting and keep doing that. So what happens is they wait for a retest. A lot of times the retest does not come. and then they wait again. This is why we trade no demand and no supplies, because you have a tighter stop loss, higher percentage of return, higher probability of return, lower probability of loss, lower probability of risk. You get what I mean? Because of the fact that, for example, you enter the trade right here, you can re-enter over here, stop loss above here. Problem is, look at this. You have a break below this. Let's say you sold this right here. Let's just say you did. Most retail traders will not sell that right there. They'll wait for a retest. Never get it. Comes in right here, you can see. Look at your risk on this one. Let's say you got 84. Your risk is 87. You know, around, I would say more of realistic, 88. 88, 87. That's about roughly $4. Instead of having this risk right here, 90, and you have a risk of roughly 3.5 with a double top. I mean, I would say that's a better risk. Again, this is coming out to be a long video, but this wasn't the only trade of the week. You had, for example, I would like to also talk about real quickly certain things of like trend lines, as how do you draw them out, what it is that I look for, and things like that. So like you see something like this. This looks weird, it looks odd, but the thing is you're trading the intraday. You're trading the intraday reactions, the intraday structures. So this is why it looks weird on a 4-day, position. This is like 4 days. So you can see it right here. You can see, for example, right here. This is also one of the other trades that I called out. This was that previous line that we tried to break right here. We broke it, so this is now the new resistance. This is new resistant area, and look what happened. We came up. You can see. Let me get a nice zoom in on this. All these no demand starting to pick up. This is during London session. No demand. Failed push up. Come, failed push up again. Break right here. This is what? This is a key area to enter the trade. The risk above here, $3-4 risk. As far as gold goes, $3-4. It's like a 30-40 pip risk. And you enter here. Target here, first target, all of this right here, and then second target pretty much would be all the way to this level right here, all of this. And we had that. You had it here. I was not awake during this time. I rarely trade London session, but I mean, there's a lot of people around the world. Everybody can trade certain different times, but I'm just showing you right here. Come back open, we come up, we get a push up. I'm going to show you this right here. There's a very key thing that I've been calling out maybe for the past week and a half probably, that this area right here is a demand zone, a strong demand zone. Look what happens. We touch here, push strong back up. We come back here, again, strong push back up. And then look at this. You had no supply right here. This is a no supply candle. Let's draw that out right there. Right there, you can see it. No supply candle right there. Lower than the previous two volume bars. Confirmation right there. Enter. This is going to be more of a risky trade because of the fact that you have a bigger tight stop loss. Look at the stop loss that you're going to have. 70, let's say, 1870, all the way below 1860. 1861, I would say. So you had 1870, 1861. That's a pretty big. That's almost 80 pips. So, but you can see this. We attempt to come back and we attempt to close below this, but the thing is, bulls came in, pushed it up, no reaction, pushed back down, failed, break, close above. Now we're gonna start pushing up. We start pushing up, you can target this area right here, first target, second target up here. Very simple. And then last thing is, we can see right here, we get a push up. Now I want to show you guys, this is that same line. Attempt to break it again. Failed to even touch it, but look at this. Push up with volume. Volume is increasing. Bulls are buying here. This is all buying. Buy, buy. No indication, no indication. Buy, buy. Then what happens is we get push down. Reaction is bearish plus a no demand. Close below it. Confirmation on this trade. You enter. Reattempt to come back up to what? This no demand. Remember, once a no demand or no supply comes in, you get a reaction pushed to the upside or to the downside to that no demand or that no supply. Like this, you get a reaction push to it, and you fail again. This becomes stronger. It becomes stronger as far as a valid trade goes. And sometimes what I like to do is, depending on the time of day, of course, I like to re-enter, add to my position. I'm adding to a winning position. I'm pretty much almost in break even right here once I enter right here. So you add to the position maybe if you wanted to. Again, stop loss above here, mental stop loss. Our stop losses are always based off of closes and reactions. Two things, based off of close and reaction. So push back down, we're invalid, a valid trade. We come down and we keep pushing down, and that's what pretty much happens. You can see. Hopefully you guys liked the video. I know it's a long video. I wanted to make a little bit of a longer video just so we can get more repetition and more understanding of how I see these no demand, no supplies form, what it is I look for on the chart, what kind of structure and everything like that. Hopefully you guys liked this video. Please subscribe, spread the word, share with your friends. I have no problem. Anybody has questions, please leave them in the comments, and peace out.